Okay, what I really wanted to do, and Zane and I are just, we're always trying to figure out how we can just bring more value, what we can do to you guys to help just like keep people excited, motivated, staying in it. Because I know sometimes there can be laws in your business where you're like, all right, I know that I'm working it, but you don't feel like you're moving the ball down the field, even though you're grinding. So we're just trying to find ways to um, just continue to just be on top in any way that we can do. So, like I told you guys a couple weeks ago, we're going to be working on like dialing in like a really good just agenda, weekly agenda that's just going to have like some congruency between weeks. Like I said, I'm gonna put a message out on school probably tomorrow, and next week we'll have one of my bankers on. So if you remember, for those that were at the live event, we had one of my bankers just come in and talk about underwriting and everything. And I'll put it out there and say, hey, this is the banker that's going to come on to our live call. Everybody that love you to make it, but most importantly, start responding up to that post with questions that you would like to be answered, because we want to just keep it more of like an hour of like Q&A. So it's not like, I mean, he'll go in for like, I don't know, 5 or 10 minutes about who he is and everything. But most importantly, it's like, let's spend 50 minutes of answering questions on how banks underwrite deals, what they value in borrowers, their appetite for risk, like all that kind of stuff that goes into um, just banking relationships, everything that goes into that. So, and then every single week after that, or every other week, we'll figure it out. We're going to be um, having another one of the guests that was there at our live event. They're going to come back on so we can ask them more questions. Because, like I said before, man, everybody, we could have done that for like 2 or 3 days in a row of just like the dialogue back and forth for like hours. And it just wouldn't be fair to just not get everybody's questions answered. So they're going to come on and get questions in. Does anyone have like a thought, a question? I really want to make sure that like we're adding the value that we can to you guys. And if you guys have opinions, suggestions as to ways that would be valuable or things that you got going on, we want to do that too. Because like, does anybody have something like right off the top of their head? Because I'll kind of go into something further than that.
Nolan, I did have a quick question. I know on Friday you said that you were going to kind of put together kind of that template email of kind of cold emailing brokers.
Cold call script for newbies. I have that on here. You're right.
Okay, cool.
You are, I would say, considered a newbie. I will do that. And
Perfect. Thank you.
a one pager to get brokers to be all in with you. So that's something else I've got written down.
Awesome. Thank
Uh,
you.
yeah, I will get this to you. That's a great call. I'll be doing that. Um, Another thing too then is what I'll do is we can do nice balloon Zane. I think the first maybe 20 to 30 minutes or longer, whatever. Um, oh, contact list. I'm pretty sure I've sent that out, Dave. I'll get that. I'll send this out too to everybody. I'll put that on the link. But maybe if somebody's got a deal, like Dave and Zane and I got on a call today and went over a deal that he's looking at. So maybe, again, Dave, if you're not opposed to it, maybe we go and look at what you're looking at. And then the first, again, 30, 40 minutes or whatever it looks like, we can go over everyone, like some deals that people are working on. And I can just consult and give advice as we're going on. Like, what does someone have thoughts or questions or anything in between like that?
No, I'll be happy to do that. I just can't do it tonight because I'm at the soccer fields, but I'll do it
Okay.
whatever next time.
Well, it's no big deal. It doesn't have to be tonight. Yeah, it's no big
Yeah.
deal. That's cool. Yeah, I think it'd be good. Well, what if I did this, Dave? If you don't mind, maybe I can just look at the email that you sent me, and then
Yeah.
um, and that might be a good way, a good place to start. And then Zane, you can maybe you know, share your screen and kind of go over the pro forma that you've had written up, and we can just kind of like ham and egg it a little bit. Would you be good with that?
Is that you talking about for Dave's deal
For Dave?
or
Yeah, yeah.
Oh, I think Dave just had that on his screen. I didn't have that on
Either
mine.
way, we can just,
So,
yeah, it's
the
no big deal.
the pro forma, I saved it to the my onboarding folder. Y'all should have access to.
Okay.
Okay, cool.
It should be in there. If not, then I don't know if I emailed it as part of the O&M or not. Sorry.
All right. Yeah, I do have it actually.
Okay. Oh, and I'm seeing on here, Connor says, okay, you already responded, but not sure if this will help, but Nolan has a slide in one of the videos that basically use word for word and have pretty much got 100% response. That's awesome. Perfect. Zach, thank you for writing that down. Yeah. Well, if you guys are good with this, I think, again, I think it's important to just get reps. You know, we've got some new agents in our life insurance business, and I keep telling everybody the same thing, that it's all about just getting reps in, like just repetition. That's the only way you can really learn, is instead of like thinking about it, it's like, let's get into it. So let's kind of just do some dialogue. Let me pull this email up real quick. Let me find it. Here it is right here. Okay. Share my screen. So, okay. So does anybody kind of have, before we kind of jump into kind of a deal, like a deal underwriting? I know Connor just asked about that script, but does anybody else have something? I know, I'm not sure if my other brother Parker's on here. He's working on a cool deal in Indianapolis that's unique, but that could be just another deal that we can go over. But does anybody have like a big question or concern, or hiccups that they're dealing with, like as they're getting started, or maybe some guys that have been in longer are coming up against like a challenge? Like, I don't want to just sit here and lecture. I want to turn this into a dialogue where we can all be on the same page together. Does anybody have like thoughts, questions, or insights or anything?
Hey, Nolan, it's Parker. I got a couple questions if you got a second.
Bring them. Yeah.
So that deal you were talking about up in Indianapolis, working on that, hopefully trying to get this thing closed. But I was talking back and forth with my broker a few minutes ago, and he's kind of like, we got a couple people. It's a vacant property. He said we got a couple people who want to take like 3/10 of the space, right? Like they don't want to take the whole place yet. He said one guy might want to expand next year, but our thought is like, he goes, well, the only problem is if you let these guys in and they do this lease, you're kind of sacrificing the long-term, possibility of somebody taking the whole place. What would your take be on that for someone to go, oh, I'm going to find a lease in the meantime, and then, maybe try to lease it out to the whole space to someone bigger? What do you think about that?
Well, so to be clear, should you rent it out just to get some cash flow, which eliminates somebody that would want to occupy the whole space, or should you wait and service some debt by yourself and wait for someone to take up the whole space? Is that correct?
Yeah, that's correct.
Okay. So it's one of the hand, two in the bush kind of answer. And I don't think there is I don't think there's a one size fits all either, because we just another partner and I, we just, for everyone that was at the live event, the building on Saturday morning that we were all in, that had like 2 sites, we just leased that up to 2 tenants. I wanted 1 tenant to be in the whole thing, but it ended up working out that we had 2 tenants. So I don't know if with the space, your property, Parker, is like what, 50,000+ square feet. It's a big site. One thing you can consider too, as you probably know, the smaller the space, the higher rent per foot that you can get. So if you rent the entire 50,000 feet to some guy and it's $7 a foot or $8 a foot or 6 or whatever, if you chop that thing up into 8 different sections, all at whatever that number is, 7,000 feet a pop, you might be able to get $10, $11 a foot, which really increases the intrinsic value. Now you might have to go put some money into it to put some spacers up. So that might cost you more money. So I think it's just a math equation. And you might be able to lease that space up because you might have a larger tenancy pool at 7 to 10,000 feet versus somebody at 50,000. So it goes kind of back to what we said, like sticking into that 10 to 40,000 feet. Like, I wonder if you were able to chop that thing up. Again, I don't think it's a wonky space, Parker, but I know it's got a couple different, some office, some docks, things like that. But if you have the chance to say, hey, let's say it was a perfect world, you could rent out 5 different 10,000 square foot sites, you might be able to get $10 a foot. And now you've really increased the value of the space because you were able to get creative and get the highest, usage of the space versus maybe somebody that would take the entire thing that's only wanting to rent for $5 a foot. Now you might have a longer lease there with a bigger tenant because he's more stable, stronger balance sheet versus, 5 different 10,000 footers. But again, it just comes down to your risk appetite. So I don't know if there's a right or wrong answer. I think it's determining what you're wanting to accomplish, and also too, like what your relationship with your debt guy is. How far along is he willing to go with you too, especially with your idea of what you're trying to accomplish with the space. I know that's kind of a round answer, but that's the best answer I think I could give. Does that make sense? Zane, do you have something on your mind about that?
Yeah, I was actually talking with Parker just a little bit ago, and of course, in an ideal world, sometimes what we like to do is just put a contingency in there and just say like, hey, if you lease the space up within the contract period, we'll buy it. If you don't, then we can back out pretty much, and just have like a no risk play. And so that might be the move if you don't want to take the risk. But obviously, it's kind of hard to get people to accept something like that unless they're like super confident in their ability to go and lease it up.
Well, you don't necessarily have to put that clause in there, honestly. If you got 45 days of diligence and you don't like the color of the paint, you can back out. It's happened to me on the selling side, actually. I had a guy come and do the same thing, was going to buy this property. I bought 9 months before. He was going to buy it for 400,000 more than what I bought it for. And I was like, yeah, let's do it. And then what do you know, like 4 days before his earnest money went hard, hey, sorry, we didn't like the survey that came back or whatever their excuse was. But then of course I look back and I see that they put my building on LoopNet and like all that stuff. So it doesn't offend me. It's just like, it's just the game, So you don't have to tell them what you don't like about the space or what came back sideways. But it's a reason you can get something tied up, go forward with it. And then if it doesn't work out, you can always back out,
Yeah, and I think the space is actually pretty well segmented for like it's like literally like almost like 10,000 to 20,000 and 20,000. So I mean, I think it's pretty easily segmented, and then obviously getting a higher rent per foot. So I think it might be actually ideal for that. So we can talk more offline about it, but I think it's
Cool.
pretty smoking deal.
Cool. Yeah, I mean that sounds like maybe what the move could be then is segmenting out 3 different spaces. I remember looking at your pro forma. I guess I could pull it up, Parker, if you're not opposed to it.
Yeah, nobody steal it.
That's right. Nobody take the deal. Let's see here. I think this is it, maybe. Here it is. Yeah, so this is the site. If it downloads, I guess. There we go. So 50,000 feet and some change. Decent looking, and this is Park, you did a great job on this too. Just proposal for partnership, just like giving a great outline of what you're trying to accomplish with it. You underwrote the deal very conservatively, which is awesome. Giving a cash flow overview on everything. It's funny, Parker and I were talking just the other day about this deal, and I really recommended him getting with the seller because here's the thing, in this, you might have to repoint some brick, whatever. That's not a huge deal, but he's estimating what, like 250,000 in rehab. So you overestimate and say, okay, maybe 400,000 in projected rehab. So what I recommended doing, and it sounds very creative, but I think that's what we're all about in this guy's situation. He doesn't have any debt. Is that right, Parker? He's got this thing paid off. He's like a young guy, kind of retired, but he's just a go-getter or whatever. What I recommended was instead just sit down with the guy, build some rapport, figure out like what this guy's doing, what's he trying to accomplish, whatever, and say, look, man, like this could really be a win-win. I'll give you the asking price that you're asking. Maybe just hold a note for 12 months. Let me go get a mortgage from a local bank for 400 grand. they get first position lien on the building. So in this case, it's a $2.5 million acquisition. The guy finances you the deal, right? He finances it to you over with a 12-month balloon. You borrow 400,000 from a local bank. The bank puts a lien of 400 grand on the property, and over the next 12 months, you rehab it, you lease it up, it cash flows. And Parker's underwriting, he thinks this building's probably worth closer to 4 million when it's all said and done. So then what you can do is after that 12 months, you've had that seasoning period with the lease, and then you just refinance everyone's equity out, the seller and the banks, with a new mortgage. And that way you were able to get into the deal with none of your own money out of the gate. And you even asked the guy to maybe take his interest payments and just tack it onto the principal over those 12 months. So no payments. And then at the end of the balloon payment, you refinance everybody out with a new mortgage because you've already got cash flow from the new tenant. Does that make sense? Does anybody have a question on that? Because that was maybe for like a newbie or kind of guy, that might be a little more high level, but does anybody I can run back through that again if somebody has questions or thoughts on that. Does anybody have a question or thought as to how I got to that? If not, if everyone's understanding, everyone's understanding. It's no big deal. That's just the way that, and again, the point of this whole thing is for us to understand that you don't have to just do things like a normal way. We can find ways to get creative. And if you build that rapport with the seller, I genuinely believe that that's where the money is made, is when you sit down with the seller and just have a conversation and try and figure out what are they trying to accomplish? What's on this guy's mind? Zane and I were in our office today. We were talking with some of our, these larger money partners, and Zane and I, Zane's like, well, and Zane can, tell me his thoughts, but basically it's like, well, we could do this, he's up for this, he wants that. I'm like, why don't we just figure out what the guy wants? What does he actually want? Does he want ownership? Does he want debt? What's he wanting to do from a money perspective? That way we can, present offers to him. Like Parker texted me the other day, hey, would the guy be open to doing a balloon thing? So we're just trying to figure this out, and I think we've got a really cool solution, which is exciting. We've chopped it up today about it. So, but what I'm getting at, guys, is that every deal is all about creativity. We can come up with a creative offer on stuff. It's going to allow us to really get deals across the finish line. I don't know. So, anybody have a thought, question, inside or outside about this? Parker, you have a thought? Connor and Zane, Dave, anybody?
Well, another thing that we could do, I mean, I know we're going to go over Dave's deal, but another thing we could do is even go over kind of the offer or the proposal that we're going to make to these investor guys for this deal over in Douglasville as well. At the end of the call, if you want to do that.
Sure. Yeah, that's fine.
And we can kind of just redo the math for everybody.
Yeah. That'd be great. Anyone else?
Yeah, because appreciate you going through that, because I kind of had the same thought with this owner and stuff like that. But my thoughts too, kind of going with these equity partner stuff, seem really exciting, And I know you guys are still kind of working things out with them. It's kind of I think most of us are also kind of pretty much chomping at the bit too, where it's hey, how does it work for them, and how can we benefit from that and try to basically maximize your guys' relationship with them. And so once you guys have a more of a better answer on that, we would love to be able to get that, so we can just take that, hit the ground running.
Yeah, and that's a great point, and that's what Zane and I were talking about today, is with this first deal with these guys, which I think is going to be a really, really strong base hit. It'll be a double-digit return for these guys. And I think what's going to happen is this one's going to work, and then they're going to be like, dang, these guys know what they're doing. So, and we can say, hey, look at all these other deals we're working on, and then the floodgates can open. Then it's going to be hey, well, these guys can do bridge debt. Hey, I want to partner here. hey, we can do a mix of both. And what it's going to create is just like more velocity for everybody. It's going to lower the barrier to entry for all the deals that we can do because we're already knowing how to structure a deal out of the gate and negotiate great terms. It just allows us to give them a better opportunity to get into something, and then all of us actually get into deals versus just like hoping and wishing, you know? So, okay. Let's see here. All right, let's segue here. Let's go over to you can go to Dave's deal. Okay, so again, and again, I apologize for my voice. I feel like I'm underneath it's not a good look, but whatever. So in this situation here, Dave's got a pretty cool opportunity. It's a building in Houston, Texas. Dave's down in Dallas. And the tenant is pretty strong. It might be publicly traded, bringing in strong revenue a year, a lot of locations. They do oil and gas. Under contract, it was dropped. Currently a national tenant. They just signed a new lease in January. And let's do a little dialogue here as I'm bringing this out, because I want to hear, as we're talking about this, a couple, not so much red flags, but things that would be on your mind as you're reading through this email. Okay. Things that are you'd be curious to know more about. Okay. So 5-year deal, no bumps in rent, absolute triple net lease. Tenant has put $100,000 in improvements. They have a buyout clause. They've been in the area for a long time. If the tenant leaves the property, they're responsible. Blah 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 blah. They're asking $1.3 million in purchase. So I think they're bringing in. I think it was $9,500 in rent. Was that what Dave said?
Yeah, I have this pro forma here
I
too.
think it was like $9,500 a month.
Yep.
Okay. Now here's a quick question. Out of all of these bullet points right here, what is in my book would be the main point that jumps out at you as not a red flag, but a yellow flag? Anybody seeing something here that you'd be like, whoa, that doesn't fit in?
You want me to answer that, or you want
No,
somebody
no,
else?
not you, Dave. You already know the answer, Dave. I want to see if anybody else on the call can see of these bullet points. There's like maybe 10 of them. And
Is there an early termination? Or no, is it not an early termination?
there's a termination fee in the contract.
Yeah.
That's not what jumps out to me.
What about the no bumps in rent?
No bumps in rent. Yes, that's what jumped out to me. Now, to answer, so Keone, you get a gold star. Come to the front of the class. So why does the no bumps? Why is that so important? Why does not having bumps really affect the deal? Anyone really?
Makes it difficult to be more creative, because if you want to put a seller financing thing, it's got to increase in value so you can refinance.
Great
Well, your
point.
revenue is never increasing.
Yes, revenue is never increasing. You leave yourself exposed to interest rate volatility.
Mhm.
Parker made a great point. I mean, think about this. Another thing that jumps out, so this is a little bit of the 303, but imagine now think about this. No, so this is okay. If you can really come to the front of the class on 404, if you ask the same question that I did, when I looked at this 5-year deal with no bumps, what was the next question that you should be asking? I'd like you to look above here. I'll give you a hint where it said new lease started in January 1, 2024. What should trigger in your mind when you see no bumps and then a new lease signed? What should come up as a red flag immediately?
I'd say options.
Yes, options. So think about this. Great job, Zane. You
Thanks.
probably just came up with that, I'm sure.
All by myself.
Yes. So what I'm getting at, guys, is if this guy, and again, I was talking to Dave, he doesn't know if this was a new lease or if they just, you know, executed an option extension. I don't know.
It's an
But
extension, I found out.
it was an extension. Okay.
Yes, sir.
Okay. All right. Well, let's rewind for a second before I knew that it was an extension.
Okay.
Let's assume that this was a new lease because that's the way I read it. Now you basically would have 5 years if it's a new lease, 5 years of just flatline rent. Okay. So this is the red flags that immediately popped up that Dave and I and Zane spoke about this morning. 5 years of no rental increases, which means again, what the way you want it to be is if you have your debt service of let's say 6,000 and your cash flow is 9,500, you want this to continue to separate, right? Like, so that way you can be able to refinance more money out. So think about it this way: you got debt right here, you got your rent, and it does this, and then you're able to borrow more money and do this and borrow more money, right? That's the way that I think about it. That's why you always want those rents to increase so you can borrow more money. In this case, it's going to be flat. You might have some principal pay down, but if the interest rate changes, let's say again, right now it's in the 6s, maybe the 7s, wherever they are today. Who's to say in 5 years the world's not ending and we're up to 15% interest rate? Now you're underwater and you haven't had any rental increases. So you're in a pinch there. But also, if this was a new lease, and what if this was a new lease and they had three-year options? Think about that. You might have a guy that could go 14 years, 5 years, and then 9 years in a row executing options with 0 rental increases. Well, maybe the market around him has rental increases. Let's say that this guy is renting for $10 a foot. And then they develop a bunch of real estate around there. And everybody's rent's increasing from 10 to 11 to 12. All the way. Now rents around are all at $18 a foot, and you're stuck because they just keep renewing these options and you don't really increase the rent anywhere. You are way under market rent. So it puts you in a disadvantage as a landlord to not be able to increase those rents. And also when you give out those max options like that. Does anybody have like a thought? I mean, that's kind of a lot right there, but that's the way that I was initially thinking as like a big initial red flag, just looking at the structure of the lease with no bumps. Anybody have a
So
thought?
how do you overcome that, or can you, or is it a deal breaker or not?
Well, I think it goes back to the motivation of the landlord, them wanting to sell, figuring out like how much does this guy really want to sell, but then also determining like the tenant and their in figuring out their opening to renew something and looking around the market too. So I look at this as like a really just unique deal. It looks like kind of the way that I would almost interpret this is that this was a owner user signing a lease to his real estate holding company. Like, you know what I'm saying? Imagine like Nolan Sanborn tenant is leasing from Sanborn Holdings landlord, and I want to give myself this sweet ass deal, and you're just doing it, which doesn't make a lot of sense because you're devaluing the real estate, but that's somebody that might not be in real estate. That might be the way that they would interpret it. So in this case, there's not a whole lot you can do. So what I told Dave this morning on the call was, if you know that there's no rent bumps, you gotta buy it crazy sweet. You can't just like razor sharp the edge at a 10 cap. I'd stretch this thing to like a 13 cap. I'd get aggressive with the offer, knowing that I'm not going to have rental increases. And then I just try and flip it and flip some paper and pop it and make like a quick 100,000 or something, like, and let somebody else take on the risk. That's the way that I would look at it. It's just because you never increase, the real estate value never increases. It does not increase because the rental income doesn't increase. Does that make sense? Like, there's no chance for the real estate to appreciate in value unless interest rates go to like 2%, and then someone can pop it at a really cheap cap rate. But when like the landlord has kind of just like run his ship, into the land basically, and he did it himself. So that's the way that I thought about it, at least out of the gate. Any other thoughts, questions? I mean, we can go over some more of this. I can underwrite this if you'd like. A couple things here, like, another idea, like you said, the asking price, as we all know, asking is almost the most irrelevant. I mean, I'm not knocking Dave for putting this on there. That's what that was on the pro forma. But obviously the asking price has no relevancy of us as investors and what we offer. But it's a good like metric when you're underwriting, so you can see the differences of what they're asking versus what you're offering. So yeah, and if I'm Dave here, what I'm doing is I'm making a ridiculous, embarrassing offer to where you'll blush. And if they tell you to kick rocks, well then whatever. And then they might come back in 3 months because it's probably the best offer that they're going to get. So that would be my 30,000 foot quick overview of how I would look at this deal. And then it wasn't an absolute net lease. It was actually just a traditional triple net lease. So another thing too.
What's the difference between absolute and regular triple net?
Triple net lease is like a traditional triple net is the landlord has no responsibilities except providing a watertight space, and he's responsible for the roof. And then absolute net lease is there's no landlord responsibilities. So there's no responsibilities at all. You don't have responsibility for the roof, the structure. If the water comes in, it's on the tenant. It's usually like an owner user is the one that does an absolute triple net lease.
Okay.
Like imagine like or like even like a Burger King or something or a Starbucks. Those are usually like absolute triple net leases. The tenant really wants all of the responsibilities because they want to control every single aspect of their property more so than, maybe like a traditional tenant that's just like a manufacturing tenant or something like that.
And I'm not sure if you touched on this part yet, but Dave said that the seller was not interested in seller financing. So would you offer that as well? I mean, I kind of feel like I know the answer, but
Well, Dave, if you can hear me, I'd like you to, we were speaking earlier, and we didn't know like anybody else, and they're not initially interested in seller financing. Like nobody is, right? Like when it's initially, and that's what we were talking about earlier, when it's initially positioned, nobody's ever interested in doing anything, right? But what I've discovered is when you go sit down, it's like I was saying earlier, when you go sit down and build some rapport with that seller and you discover that they're actually just a regular person, they're not like some high and mighty corporation, some guy with a fat tie, like one of those guys. They usually let their guard down, especially when you just start asking them questions about themselves and how they got into the business and like why they chose, like in this guy, why did you choose oil and gas? Oh, you played college baseball. That's cool. So did I. Like, what? So why this? You just sort like to have dialogue with them, and they realize like you're just a person too. And then they start to ask you about you. Like, man, I'm in commercial real estate. The group and I that we run with, we buy light industrials exactly like this property. And what I've tried to do as myself, you can say this, like I've discovered it's really not me versus you. It's not a buyer versus a seller. I've tried to become a seller consultant, like figure out your situation and find the best way to extract the most juice out of a deal. And usually the best way to do that is to eliminate Uncle Sam. He's usually the guy that gets the fattest chunk, and he didn't freaking do anything. He was just there. He was a parasite. Does anybody know what a parasite is? They can't live without their host. And if you really think about it, like Uncle Sam is a parasite because the taxpayer is the host. So it's like they can't function without us. So I don't like to give them anything more than what they need. That doesn't make any sense. So I like to like tell that kind of story with these guys, and they can resonate with that, especially if they're in business. And I'm like, look, end of the day, man, it's not me versus you. It's me and you versus Uncle Sam. And when it's positioned that way, that's when they start to open up and be like, well, what do you propose? Like, what's on your mind? What do you think? And that's when I like do that whole slow down. And I say, John, I'd like to offer you an opportunity. And you've heard me say that 100 times. because at that point you've buttered them up and they're like, you didn't ask for anything. You're just, you guys have built this rapport. You've built this oxytocin, this bonding idea, this bonding chemical in their head. And then they're like, man, you're so right. That's right. I mean, I 100% agree with you. He is a parasite. It's crazy. I've had to pay so much taxes out of business. Like, you start to rile them up and say, let's keep him out of this deal. All right, well, what do you mean? What do you propose? John, I want to offer you an opportunity. And when it's set down like that, it's slowed down, you're going to just suck them in. They're going to be like, well, what do you mean? Yeah, well, all right, what do you got? I want to offer you an opportunity to leave money in this deal. You kind of say it with that like fire. And they're going to be like, well, what do you mean? They're immediately curious versus a stand-up guard because you asked them to finance you something. You asked them to, to sell or finance. It's totally different. And if you practice this, and like, I would really recommend, like, everybody on here, find somebody that's a part of the group. Next week, do a Zoom call, record it, and do some seller financing conversation like that. Like, have that dialogue and everything, because it'll help you get more comfortable using the vocabulary, lowering your voice, using inflection, like leaning in, things like that. It helps when you practice it. And what they're going to respond, you say, look, it's not about me. It's about what your accountant thinks. I got this one pager, blah, 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 blah. This is for your accountant. Let me flip it over and scribble what this means if you leave money in this deal. Let me show you how it works. Boom, 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 boom. This is for you. Go consult with your accountant about it. He's the expert. He's going to know what's really best for you. And then at that point, that's when he's like, man, let me take a peek at this. He's going to be immediately open. And for those that were at the live event, that's what I did with Jerry. That was the guy that on the last building that had all the stuff in it. Like, I sat down and did that exact thing. And he's like, man, this makes a lot of sense. Yeah, let's do it. And it made sense for him, So that's my sermon. I'll take up an offering, but like, that's what I'm saying is like so powerful when you just try and get it down to the you and me level versus thinking like they're some conglomerate corporation and they won't listen to you because they're not interested in seller financing. I think that's bullshit. I don't think it's real. I think if you just educate them and help them understand that you're on their team, they immediately lower their guard and they're wanting to be on the same page and agree that it makes sense. Anybody got a thought or question about that?
No, I think that's perfect. I think you have to get so comfortable enough to be able to speak like with that financial acumen of, man, we're in this deal together, man. Let's not pay taxes on this thing. I think that's where you have to get comfort with it. And that's where I think that's where I struggle. And so just kind of rehearsing it or going through it, like you were saying, would probably be beneficial. So you're not like stuttering and talk, when you're talking to him, right? So you got to be really confident and assured of yourself when you're going through this.
Yeah, it doesn't happen. I agree, Dave. It doesn't happen overnight. Like, I didn't just like come up with this like on a whim. It's taken time for me to develop that, but I didn't. I mean, it sounds funny too. I tell the guys in our office, I say, when you're driving down the road, try this. This is super easy because you can totally keep it to yourself. Go down to Dollar General. You guys have seen my videos where I put my little camera in my corner of my car. Buy one of those for $6, put it up in your car. And as you're driving, do a little role play with yourself. And then you replay it, you hear it back, and you'll hear where you stuttered, where you stood up, how you said, which I did a trillion times, but you start to develop like, okay, this is where I usually hiccup, or, hey, this part of my pitch cadences the next part of my pitch. And then you know the inflection in your voice and the question to ask, because again, it goes back to your standard operating procedure. Like, okay, this is the next logical step of this call or of this dialogue. You'll know what to expect. You know what the response they're going to have or what objection they're going to have. And you're going to know what question to ask them in that objection response. So it doesn't happen overnight, but if you practice it, just as you're driving from work for 20 minutes, you do 2 of them in a row. Imagine you doing that even for 3 weeks in a row. If you did it every day by yourself, keep the videos in your car, don't share them with anybody, but you did it, you would get so much more competent doing that instead of like listening to, Jocks the radio or whatever, right? So that's just my opinion. And I do this. I'm on the social media every day, so I know it's so much easier for me to say that than maybe everybody else, but it does take a little bit of courage out of the gate to just get out of your comfort zone. But man, that's really the only way that you can really learn and grow as a person. Like you'll discover like in a month, you'll be like, dude, this is like, I'll make an offer to anybody because I don't care if they say no. Like I actually look forward to the no's because I know I'm one closer to a yes. And it just creates this compounding confidence. And man, you get to a point where you're just like, I'll make an offer on anything. And that's when I say, and sorry, I'm maybe a little tangenty here, but like that's why when I'm like, who cares if they say no? Like you're just making offers because if it happens, great. If it doesn't, it doesn't. Like you just keep on moving forward. We don't get hung up and emotional about one deal to the next. It's like if it makes sense, great. If it doesn't, it doesn't. And that will like arouse everybody around you. They're gonna be like, damn, this guy's beat bopping. I want to be in this guy's crew. And I want to lend money to this guy. I want to partner with him. And it will just attract like-minded people. And what do you know? That's when the deals start flowing in, and you're like, this is awesome. This is exactly how I drew it up. I think it just takes getting out of your comfort zone out of the gate. Zane, you got a
Hey,
thought on that?
Can I ask a quick question?
Yeah.
Sorry. So let's say he goes for it and then in 2 years, whatever, he wants to be cashed out, right? We refinance and get cashed out. Now he has a tax bill down the road. What do you say to that when he says, well, what's going to happen in 2 years? I may be deferring taxes now, but 2 years, I'm going to have a big bill.
Well, that's a great question. And the best answer I can give you is we got a 1031 exchange expert.
Yep.
And that's what we try and provide an entire white glove service for our sellers, because we are seller consultants. We try and, on our, you can show them on your one pager. This just shows you still paying taxes. When you really want to get cute, we can take that number from 300,000 in taxes all the way down to zero. We actually have 1031 consultants, broker consultants on our team that we can put you in touch with when that time comes. And we'll make that introduction very quickly and smoothly. So once you close, we're already going to have a designated property so you can continue to kick that can down the road and continue the cash flow, and you go and buy a bigger property. So I would say we already have 1031 broker consultants on standby for people in your exact and unique situation. That's like the best response. So you into the first deal with them, leaves money, pays less tax. Then he's got 1031 seller consultant brokers that can help you eliminate taxes. And then one day down the road, when you do graduate to the next life, your basis steps up and all of your heirs and beneficiaries get to have that real estate cash flow forever. Or if they decide to sell it, that kind of thing. But that's not important today. Zane, do you have a thought on that? I don't want to put you on the spot. Or anybody else have a thought on that?
No, I think it's good. And I think it also goes back to just like how many times the sellers have said they're not interested, and how many times, sometimes it doesn't work, right? Like when you make the offer, it really doesn't. But a lot of times you'll be surprised. And I've been surprised several times over the past month.
I mean, we were talking about the just the deal that we're working over in Douglasville with Tim and Russet. When it was initially brought up to him, he said the exact same thing, Dave, like literally, like almost verbatim, like, I'm not interested in seller financing. I'm not interested. And then when we went and did our whole, not our pitch, but made our offer and showed him why, that's when he went to his accountant and said, hey, not only do I want to leave 25%, I want to leave 40% in the deal. So it's just not uncommon when it's positioned properly. And not to mention too, Zane and I was in my office about an hour ago. I get a call from one of my local bankers. He's like, hey, I got a guy over in Atlanta. He just saw that. He's like, Nolan, I saw that Nolan Salmon borrows money from y'all. We like that location. We like that building. Call him to see if we can lend him some money. So we got another lender that was like, that wants to be in the running. I could show y'all his text. Literally, it's almost comical. He said, call me when you get a chance. We want to make a run. We want to make a run on your Douglasville deal. So it's just crazy. Like I don't know. I don't know how else to describe it. What I'm getting at though is that like that kind of stuff can happen when you're just putting out like who you are, what you do, the guys that you run with. It just starts to compound like that. And then we've got other mortgage brokers that are wanting to finance. Like what I'm getting at, guys, like this is not only possible, this is inevitable for all of us. And it fires me up because it's like this stuff is just we're all on the ground, like on the ground floor right now of this whole thing going. So
And another great thing is like we're getting all this traction on these deals because like we're sticking to the metrics, right? Like if you guys can go out there and find the deals that match these physical metrics, it makes sense, and then back into your financial metrics, it makes it so much easier to go out and like pitch it to bankers and pitch it to investors and all that stuff. To where now we're kind of just like the hard work is done in terms of just like finding the deal and negotiating it to make it make sense. And now we just got to go and like execute on the back end. So
100%. I love it. Yeah. Thoughts, question. Anybody else have anything else on your mind? I know I don't like to be some lecturer, but sometimes I get into it because I believe in what we're doing and it fires me up. Connor, I'll work on getting this cold call script. But if you saw before, like Zach said, it's under week 2 of the 8-week outline bullet point 3 under how to speak with brokers. So
I'll check there too. Yeah, thank you.
is it on there? Okay, good. Awesome. Cool.
Hey guys, this is Jorge here.
Hey Jorge, what's up, man?
Actually, my first time kind of speaking in the group, so excited to be here.
Awesome.
what's up,
Happy
man?
to have you.
To meet all you guys. So crazy enough, I was looking at that deal as well. I actually had texted Zane because I'm in Houston, Texas, and I
Oh
had
shit, no
crazy
way.
about that deal.
Oh my gosh,
And
that's awesome.
I mean, props for Dave. He got a lot more ahead of me, but it just that's interesting. Like, I guess so. I guess my question is, so like, if this ever happened, I mean, has this ever happened before?
Well, I don't think Dave has it tied up yet, so the race is on. No, I'm just kidding.
He's done a lot better work than I have.
No, I'm totally kidding.
I mean, it's I'm on my 3rd week of the training, so
Yeah.
kind of froze a little bit, but yeah, he's got a lot more information than I have. So, but I was just it was quite interesting to see that.
No, yeah, that's actually pretty funny. Again, I have not had an experience where a couple of guys were looking at the same site, but again, I even said to Dave too, and I was looking at just like the photo here, the aerial. I'm like, this is the actual property, the highlighted. But I said, dude, look what else is around it. Like there's some other sites that who's to say you can't own this entire little industrial park right here? You
Yeah,
take this one down.
so,
You guys
so
can
the owner actually it's right next. So the owner owns the whole acreage, and he owns like a trucking company, and so he's the neighbor.
Oh my gosh. So you guys really could like, man, or Dave or Jorge, whoever, like it's almost like the show American Pickers. You ever watch that like a couple years ago when I was in high school where you just grease the skids out of the gate, like just buy something from the guy and then he'll just open up the floodgates and start to say, well, yeah, maybe I'll sell this too. And then you can end up owning all of this stuff. You just never know. You never know what it could look like. But yeah, Dave said this is like really close. I mean, I can almost see some type of highway back there. I mean, it's really, and if they're in the trucking business, you know how important getting from A to B is and not being behind stoplights and everything. So yeah, this looks like a pretty strong opportunity if you can get it for the right price, like anything else. So cool. Anybody else? Thoughts, questions, anything else before we get moving? Awesome. Well, I'll get this thing uploaded. I really appreciate everyone making it on tonight. Again, we'll keep working. I'm going to make a post tomorrow on school about our next week's guest. It'll be one of my bankers. It'll either be Patrick or it'll be my guy Mason, who is at West Alabama, who actually lent me the deal on the big warehouse that we just bought. So I'll if you don't mind, come up with some questions and put it on the forum. I'll create a little 1-pager, and then we can go over all that with our banker, and we'll just turn it into a Q&A. We'll answer like the first, like, 10 or 12 questions or whatever, and then we'll turn it into the rest of the Q&A, and we'll just do that for all of the speakers that were at the live event, so we can just get more, dialogue and more conversation going versus just them talking before. Is that good with everyone?
And also, Nolan, do we have those presentations from all of them as well?
Oh yeah, I will upload. Yeah. So one more thing here too, I'll share with everyone. I have all of these. I have all this stuff right here. So what I'll do is tonight I will upload accountant, attorney, I'm just kidding. Sonny Potter, the broker, Patrick, the banker, Tim and Russet, their deal, we'll be just talking about. This is not necessary, but you guys have all this other stuff. And what I'll do too is I will upload on this blueprint. This is the one thing I wish I would have done better, guys. I'm really sorry. Is I wish I would have like updated this as we were doing it live. So that's one thing I wish I could have been better at. And I apologize, but I will have this uploaded with all these metrics on here. That way you can kind of have that for, kind of just like your baseline foundation. Okay. I'll put all this stuff on school tonight so you guys can have all of it. Okay. Sound good? Awesome. All right, everyone. Y'all have a great evening. Thanks so much for making it tonight. I'll upload this video and I'll put it on school. Thanks so much for making it, everyone. See you.
Thank you.